Welcome to Wisdom Wednesday. I'm Coach Clarence with Geneva Financial. Do me a favor before I get going, please smash that like button. And if it's your first time, do me a favor, be sure to hit the subscribe button so you can get this information every week. Make sure you also hit that little bell so that you're notified every time we put out a new video. Okay, so today I'm discussing reverse mortgages. Not going to get too crazy, some general guidelines, okay? And make sure that you ask questions in the chat, ask questions in the comment, and I can get back to the answer. What's so great about it? Well, with the reverse mortgage, there are no income requirements, no ratios. Since monthly payments are never due, credit is generally not an issue. However, a financial assessment is going to be made by us to determine if you have the income sufficient to cover your taxes, insurance, HOA fees, etc. If not, then the sufficient funds needed to pay those items will be set aside from the reverse mortgage line of credit. Okay, here's something cool. The loan is not due and payable until it's no longer your primary resident, okay? That is super cool. So when it's no longer your residence, you got to pay it back. Who's eligible? Well, there are different requirements. Obviously, primary resident must be your primary residence. And if you bought a new home, must be your primary residence within 60 days of closing. Okay, at least one of the spouses or borrowers has to be 62. Okay, in places like Texas and Utah, both of you guys have to be 62. Okay, if you need funds to cover closing costs, that comes from the proceeds of your sale or some assets you have, checking, savings, 401k, retirement, whatever. That covers the cost. There are a lot of different properties that we could do this on. Some new construction is eligible once your home is completed and your proof of your residency is there. 1 to 4 units are eligible, but it's very important that you are occupying one as your primary residence. This includes FHA approved condos, manufactured housing that meets HUD guidelines. For 2 to 4 units, again, one of them has to be the primary residence, okay? So basically what this is a reverse mortgage. The amount of funds available is based on the age of the youngest borrower or non-borrowing spouse. Minimum age, again, is going to be 62. All right, so what is it? You can borrow money and live off that money and not pay it back until it's no longer your primary residence or someone passes away or both borrowers pass away. Then you have to pay that back, obviously. Here's something to be aware of. The loan balance increases over time as interest on the loan and fees accumulate. As your home equity is used, fewer assets are available to leave to your heirs. You can still leave in the house, but they'll have to repay that loan balance if you pass away, obviously. The most common method of repaying a lot of these reverse mortgages is selling your house, and that's how you can get it paid off. Or if you pass away, you pass along your heirs, they are now responsible to pay that loan off. Okay, so it's cool. It does have some negatives. Again, one of the negatives is your loan fees and the interest is rising. So if you're borrowing a lot of money and maybe your home isn't appreciating, that's something you need to consider. So it'd be wise to really make sure you have a conversation, make sure this can work for you. Other than that, I think the reverse loan is cool, but again, I'm not a financial advisor. You want to speak to your financial advisor to see if a reverse mortgage just makes sense for you, okay? Because a lot of times, if there are not enough proceeds and you don't have enough money coming, you're still responsible for your taxes, your homeowner's insurance, home maintenance costs, and all those things, and any emergency comes up, you're still going to be on the hook for that. And we definitely don't want you to lose your home due to getting behind. All right, to wrap this up, the positives of the reverse mortgage is that for some people, the appeal of the reverse mortgage is that you can access cash for living expenses and you don't have to make any monthly payments to the lender or pay interest until you sell your home. So that's cool. Again, remember the negative is those fees are there, and if things aren't moving and balancing themselves out, you owe that. So I hope this helps you. Let me know if you want a more specific topic discussed. And if you'd like an individual conversation, reach out at www.clarencefergusonhomes.com. And I hope to see you guys soon. Like and share, subscribe. We'll see you next time.